Hello traders, my name is Andrew Aziz and I'm a trader at Peak Capital Trading, a proprietary trading firm in Vancouver. I'm also author of a couple of trading books. So in this video, I want to talk about one of the most important trading instruments for day traders called TQQ. I know a lot of people might heard that on Twitter and on YouTube, but I want to talk about what it is and how you can effectively use that to make a decent profit, especially in a very volatile day like today. I made an amazing day trading there on TQQ, and I want to share with you how I traded that, how much I made on money, and why TQQ was my best choice of trading. Now let's go over to my screen and let me talk about what's happening at the market. Today, market was gapping up. Looking at the QQQ, the index that is following the technology sector, in the last 8 months, we have been a huge drop. It's almost down 35% and we're deep into the bear market. So what's happening in that, especially last week, the QQQ was dropping all the way from $300 all the way up to $270. Today, the stock was gapping down. The index was gapping down QQQ. TQQ is an instrument that is following QQQ index, but on a leverage approach. Like if it drops 1%, that one drops 3% on a intraday version. So it's essentially, it's a derivative. So the price action by itself doesn't have any meaning, but it's like an algo is following exactly what QQQ is doing. So one way of trading TQQ is always to have a look at QQQ, because that index is the leading price action for TQQ. So what I was noticing that QQQ was gapping up about 2.1%, 1.5%, and there was a potential for it for opening range breakup at the open. So in the pre-market, it was staying strong, it was just below the VWAP, and at the open, it was ready to squeeze for a 1 minute opening range breakup or potentially a 5 minute opening range breakup. So what I could do is I could use all of my money in the account and buy QQQ at $300 and get a 1% move, or I can use a better buying power, buy TQQ at $20 and get a 3-4-5% move on that. So as you see, the TQQ, because it's leverage product and it's following exactly QQQ, you're actually getting a much better capital efficient move on that. So here it is, you see QQQ had a very nice 5 minute opening range breakup. So had a very nice 5 minute opening range breakup, or better than a 5 minute opening range breakup. You actually had, when you're looking at a 1 day chart, it was a very beautiful 1 minute opening range breakup from 278 to 280. But 278 to 280 is not much. But when you're actually looking at something like TQQ, which is the leverage product of that, you see that actually that move is more significant, from 21.75 all the way up to 22.30. That's a significant move. That's 5% move, and that's what you want as a day trader, the volatility at a reduced cost of capital. So TQQ is an amazing product to trading intraday. Can you trade TQQ overnight? Can you hold it for longer term? Yes, possible. You can do that, but they're not designed for long-term holding because they decay over time. So if you, for example, drop 10%, they drop 30%, and if the market goes back up 10%, they go back up 30%, but from the beginning. So it means that they're not really recovering back to the point that they were. So there's always this decay effect in them when the market is going down. They are really good in the bull market, but if you get into the bear market, holding them overnight is really not a good idea. They're instruments that designed for day trading, for active day trading. And there are a couple of them: TQQ, SPXL, TNA. These are for tracking all the big indexes. And they also have the reverse as well, like SQQ for going short, TZA for going short IWM, and SPXS for going short the market. Overall, in a summary, is what you should look into that is you should be able to read the market itself. You should read QQQ, SPY, or all the indexes that you want to trade really well. And instead of trading those, trade the derivative that is much more capital efficient based on that. And as you see in this example, I went long. So what I was watching, that is the cues we're trying to punch through the VWAP. I went long at 2180, added more at 2195, and I had a very strong move up all the way up to 22. I added more again because I saw this small ABCD pattern on that. I added more and all the way up to 2235. And then I got stopped out completely at the break even. And as you see, when the drop starts, the drop can be actually significant. So you don't want to be really on the wrong side of TQQ. So that's how TQQ works. So who provides TQQ? There are companies like ProShares Ultra is a company that are actually providing this and making sure that this 3% leverage or 2% leverage that they are defining for these products are actually following the market, and the market makers are controlling that. So as a day trader, TQQ is a very, very important instrument that you should be able to trade. Has a lot of volume, a lot of liquidity, and in that case, I myself had a very, very, very nice trading day on that. I made $12,000. So my name is Andrew Aziz. I run Bearable Traders community chat room. If you want to trade live with me, you can join me live every morning. Just go to bearabletraders.com/onboarding. There's a free live class that I do for you to walk you through all of this. And I hope that I can see all of you in our community. If you like this video and if you like to have more of these videos, please like and subscribe. And if you have any questions, please ask your questions in the comments.